Welcome to Real Life Trading. Our mission is to enrich lives. My name is Brad Reed, and I am a real life trader, and I'm here reminding you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. We're here on the morning floor where we've been doing some day trades, and a question came up about credit spreads, and wanted to share a little trick that I sometimes do when I do credit spreads. Right now we're looking at Boeing, and today is May 3rd still. And if, I'm not saying this is a trade that I'm going to do, but if I were to do a credit spread on Boeing on the call side, I would be looking at a 138, 139. And on the put side, I would be looking at a 128, 127. And you could do both, and probably wouldn't be doing both. If I were to do this, I'd be, actually, you know what, I wouldn't do this because this overall appears to be going up. So that puts the call side in a little bit of jeopardy. And currently, it appears to be rolling down, so that puts the put side in jeopardy. So this is not a trade I would do, but I can illustrate the point I want to talk about, which is the credit fill. So if we look on the call side, and our bear call spread would be a 138.39, expiring the week in May. Let's see, let me scroll here. There's the puts, and here all are the calls. So the 138, 139 bear call spread, I would sell the 138 for 42 cents, and I would, I'd sell it for 39 cents, and I would buy it for 31 cents. So that would be an 8-cent credit on a $1 risk. That's 8%. Not bad. One thing, though, that I was taught many, many years ago is that most of the options are done by a human rather than a computer, like most of the stocks. And this human has to pay a lot of money to be a market maker. And so, therefore, they are sometimes more willing to take a lesser commission. So let's understand that when the market maker does a transaction on the $138 strike call, they expect to make 3 cents on it, right? The difference between the ask and the bid. So if we're going to do 2 of these at the same time, and that also limits the risk of the market maker, that's another discussion. Sometimes they're willing to take less money for each of the trades. So for instance, if we were to do one of these trades, they would make 3 cents. But if we're to do both, they would want 6 cents. But what if we offered them 4 cents? So what I'm really saying is, hey, I don't want to sell the 138 call for 39 cents, Mr. or Mrs. Market Maker. I want to sell it for 40 cents. And I don't want to buy the 139 for 31 cents. I want to buy it for 30 cents. So I could offer this transaction to the market maker, sell the 138, buy the 139, but I want a 10-cent fill. Well, the market maker would likely do this for 4 cents instead of 6 cents because they get to do the transaction. The market maker makes 2/3, most of the money they were expecting to make, and the market maker's risk, if things go completely wrong, are very limited. So what I usually do is I look at the total cost of the transaction for the market maker, cut it by about 1/3, and see if I could get a fill. Now the difference there is, instead of making 8 cents on this credit spread for us, we would be making 10 cents. And that goes from 8 cents to 10 cents, and on a $1 risk, that goes from an 8% reward to a 10% reward. That's pretty significant when you're doing credit spreads. So again, anytime you do a credit spread, always ask for better than the worst possible bid-ask fill on those things. So again, the worst possible fill on this would be 8 cents. I would ask for 10 cents. And usually, I would say 95% of the time or better, I get filled in an instant. The market maker doesn't even think about it. They just say, yes, you're in. So that was on the call side. Let's take a look at the put side. It would have been a 128, 127. So we would sell the 128 for $1.64. We would buy the 127 for $1.41, and that is 23 cents. for $1 risk. That'd be a 23% reward on this. That's pretty cool. Now, by the way, if you ever get rewards that big, 20%, you might be missing something. The market maker definitely usually doesn't just hand out 20% rewards like that. So this thing is likely to continue bearish just based on these numbers, but also, based on the picture, I would not want to do a bull put spread there. But if I did, like we said, 23 cents, the way we're looking at it right now, by selling the 164 and buying the 141. But when I see that the bid-ask spread on the 128 is 164 to 169, that's 5 cents. On the 127, it's a 3 cent bid-ask spread. That means there's a total of 8 cents that the market maker is wanting to get. They would likely do this deal for 5 or 6 cents. So instead of 23 cents, I'm going to ask the market maker to do this for 25 cents. And again, that's another 2%. And if you consider both sides of the iron condor that we've been looking at here, that's an extra 4% or maybe even 5% reward on just this one credit spread. So if you can use this trick, negotiate with the market makers, what I call it, but never take the bid-ask spread. When you do your credit spreads, always ask for at least 30% of the profit that market maker is looking for. So again, every broker presents this a little bit different, but yeah, again, look at what the market maker is looking to earn based on the bid-ask spread, and ask for a little bit extra on your credit fills, and you should be able to get an extra 2 to 3 to 5% sometimes on each one of your credit spreads. So over the long run, that should add up nicely in your favor. If you have any questions, send me an email. My email is brad@reallifetrading.com. If you want to call me, I have a cell phone in the United States of America, and that cell phone number is 512-296-8403. Thanks for watching this video. For more videos like this, swing on over to www.reallifetrading.com. We have a ton of free educational videos on stock trading. Whether you want to be a long-term buy and hold investor, or if you want to learn how to day trade options, it's all free. Check it out, www.reallifetrading.com. Thanks for watching this video again. And as always, trade on logic, not on hope. Have a good one.